Good morning, this is the latest market news. I am Uliana. Asian shares were lower Wednesday, taking a cue from Wall Street overnight and continued steady monetary policy from the Bank of Japan as expected. The Nikkei 225 fell 0.3% after the yen strengthened against the dollar on solid export data. Elsewhere in Asia, South Korea's Kospi lost 0.2%, and Australia's S&P ASX 200 lost 0.7%, as Sydney continued to be weighed by miners. The Hang Seng Index fell 0.09% in morning trade. Overnight, calls from a key Federal Reserve official for rate hikes sooner rather than later, coupled with disappointed earnings out of the US retail sector, sent Wall Street tumbling. The Dow 30 fell 0.83%, the S&P 500 index fell 0.65%, while the Nasdaq Composite Index fell 0.70%. Overnight, the dollar traded mixed in choppy trading against most major currencies after a key Federal Reserve officials said rate hikes might need to come sooner rather than later. The Japanese gained further against the dollar on Wednesday after trade data showed solid export growth, and the Bank of Japan held monetary policy steady. The Bank of Japan unanimously voted to keep the current monetary base target at the conclusion of a two-day board meeting. US dollar Japanese yen traded at 101.19, down 0.14%, after the Bank of Japan announcement, and Japan's April trade balance showed a deficit of 808.9 billion yen compared to a forecast of deficit of 640.0 billion. Today, major news include minutes from both Bank of England and the Federal Reserve. We expect central bank-driven choppy trading, but little in terms of lasting changes, as the focus is solely on the European Central Bank's upcoming meeting on June 6. Eurozone May consumer confidence 14 GMT. The market consensus is expected consumer confidence to improve further to -8.1 from April's -8.6. Some bank desks have suggested that the Ukrainian crisis and slower Chinese economy could begin to hurt confidence in Europe. But the lesson from history is that consumers' mood has kept improving for some time now, without notable pauses or hiccups. It was the latest market news provided by ICO FX. Goodbye.